Hello people, welcome again to Fantastic. This video is actually the part 2 of the previous video we made, which was also the first ever video on our channel, Fantastic. So if you haven't already watched the video, please do watch it. I will also attach the link in the description below. And talking about the previous video, I would also really like to thank you and appreciate all the comments and all the response I got. Whatever maximum, minimum kind of response you may think it is very appreciative and really close to my heart. Thank you so much for the response. So now without further ado, let's just start with the topic. As compared to the other countries, the market share of electronic vehicles in India is extremely low. But the government has been incentivizing for the same. It has actually also introduced a FAME2 scheme which provides subsidy for the buyers. This is basically to promote more and more sales and manufacturing of electronic vehicles. What is FAME2 scheme? This is basically the second phase of FAME scheme. Okay, I'll just explain in short. Basically, FAME2 is which provides subsidy for the buyers of electronic vehicles, and this scheme has an outlay of rupees 10,000 crores. Also, the GST rate is at 5%, which is minimum for its kind. Now, it is difficult to recognize which kind of particular stock or sector might be gaining the actual boom because of this revolutionary changes we are expecting due to the introduction of electronic vehicles. Because as we precisely mentioned in the last video, this boom is actually on the nascent stage. But there is always an advantage of early movers. So let's take a look at few of the early movers which can actually get the advantage of being an early mover. Now, before getting again into the video, a small disclaimer again, which we already put up in the starting of the video. All the stocks which we are going to discuss in this video are not any kind of recommendation or advisory for you to buy. You really need to consider talking to your financial advisor or your planner before investing into these stocks. These we see as early beneficiaries which can actually give you benefit if you want to participate in the boom. Like I've mentioned again and again, electronic vehicles, the boom is at the nascent stage and it might not give you immediate effects, or basically this is not an advisory, not a recommendation officially given to you. But if you really want to buy, we have done research on our part. We would really like for you to do the research on the stocks and then go ahead and invest into these stocks. So if you have come to the part of this video yet, which means you are actually interested to know the sectors, which I'm very happy about because that was my motto to make this video. Okay, leaving the lame jokes aside, now the first and most important sector which you can already guess, which is actually very easy to also guess, is the automobile sector, and we chose Tata Motors in that. So Tata Motors, why do we choose this company? First of all, let's look at the sales numbers. I'll try to post the sales numbers over here so you can easily understand what I'm actually trying to say. This auto giant was actually struggling to post good numbers till 2019 amid the auto slump, which actually also affected the auto and auto ancillary stocks in 2019. But starting from this financial year, Tata Motors has actually gained a lion's share in the market share of electronic vehicles when they launched the Nexon EV model. It is maintaining a market share of 50 to 60% in the EV sales. You might say that Maruti and Hyundai are actually much more leading or much more ahead of Tata Motors, which is also true if we see the overall auto sales numbers. But if we see the electronic vehicle sales numbers, Tata Motors has gained a significant market share. Small risk factor to consider, or some 1-2 risk factors I would like to mention. One is Tesla, the world's largest EV manufacturer, is announced to enter into India by the year 2021, and this might create a stiff competition for Tata Motors, not just by Tesla but from some other domestic giants as well. And the other small thing is, might not be very small thing, but the debt to equity ratio of Tata Motors is really high. It is one of the highest in the automobile sector. But being the big brand name Tata is, I think it will play advantageous role for Tata Motors as a company. The second stock we chose is Hero MotoCorp. A well-known Indian brand name, Hero MotoCorp is enjoying the major share in electronic vehicles two-wheeler sales in FY21. I'm going to post the sales numbers again over here for your better understanding. If you really want to look at the sales numbers, pause the video or you can continue to the video. So basically there was a significant decline in sales numbers of EVs from last year to this year, which was affecting all EV manufacturers, and they were trying to get back on track. But Hero MotoCorp has rebounded the most. It now has 36% of the market shares in the electronic vehicle sales during this period. But the interesting fact is, this is the not only one thing which is helping Hero MotoCorp to stay on the top spot. It also has 35% of stake in the third largest two-wheeler manufacturing company, which is Ather, a Bangalore-based startup. Being the big brand name and having a well penetration in rural as well as urban areas, Hero MotoCorp can play a significant and crucial role in the marketing of electronic vehicles in the Indian markets. Third one, Mahindra and Mahindra. A well-diversified auto sector name, is actually also the pioneer of electric cars in India. Yes, you heard it right. Mahindra Riva model. This actually had a tepid response, but this did not hold back Mahindra and Mahindra from bringing more and more electric variants. It has variety of electric variants in various categories, like the e-Verito in sedan class, e-Supro in commercial vehicles, e20 Plus in compact, and Mahindra Trio and e-Alpha Mini in three-wheeler segment. Among that, the Mahindra Trio is one of the first which has achieved in the three-wheeler segment, which has achieved a sales of 5,000 unit. And being the good penetration Mahindra and Mahindra has in rural India, it can actually also benefit for the company to promote more and more of the other electric variants in India. It is also important to consider the financials of the company. It has actually been struggling to maintain a profitability and good growth in the sales from the past few quarters. Now let's talk about the battery manufacturer, which cannot be completed without mentioning Exide Industries. Exide Industries is a Kolkata-based company which is into the manufacturing of advanced energy storage solution for the modules or the applications which are used in electronic vehicles and the telecom sector, which is in the lithium chemistry domain. It is also in the lead acid battery manufacturing, which is used in power stations due to its higher cell voltage and its lower cost. Exide Industries Energy Private Limited, pardon me for any kind of mispronunciation if I have done, is basically the new age joint venture between India's largest battery manufacturer Exide Industries and Europe's leading energy storage solutions provider Industries. Almost every auto company in India is a client of Exide Industries, and that is why it holds a strong hold in the market of battery manufacture with strong financials. And that's why it has helped Exide to become a leading player in lithium-ion battery manufacture in Indian market. Now let's talk about Tata Chemicals. You might be surprised why am I mentioning Tata Chemicals. This soda ash and sodium bicarbonate manufacturing company, how can it benefit from in the electronic vehicle segment? If you look at the recent developments of this company, they are trying to capitalize on the growing opportunities in electronic vehicles. It has collaborated with global battery makers to come up with contemporary and next generation chemistries, and ISRO, Indian Space Research Organization. It will emphasize on active materials manufacturing, cell and battery manufacturing, and also recycling the materials from the used batteries. The global presence it has and the brand equity Tata Chemicals has will actually really help to gain a major share in the market, in the Indian market for Tata Chemicals. Some other big brand names which you might consider in this segment and which cannot be excluded, which are worth mentioning, are as follows. Starting with Maruti, this megacorp could not prove their aptness yet in electronic vehicles, but it has lion's share in overall sales for past many years, which has created a strong brand name among consumers. Amara Batteries, this is virtually a debt-free company and is the second largest manufacturer after Exide can seek to grab a slice of market share in lithium-ion battery. Ashok Leyland, a gem from Hinduja conglomerate, has introduced its electric bus circuit and has formed a strategic alliance with Sun Mobility, which is a company led by Chetan Maini, the founder of first electric car of India. Bajaj Auto and TVS Motor, which has as strong brand name as Hero MotoCorp, and they have launched their electric variants also. HSCL, Himadri Specialty Chemicals Limited, which is in the making of anodes for lithium-ion batteries. Now there are many other stocks which can benefit, many other sectors which can benefit from this evolution or change we are expecting from electric vehicles, but we try to choose best of them. So this actually has not ended over here. We also have one more part of this video, which will be the third part, coming in the next week. One more sector which might not directly be connected to the becoming a beneficiary of electronic vehicles, but there is definitely very good opportunity in that sector as well, which will be there in the next and the last part of this segment which we are carrying on of electronic vehicles. So stay tuned for that. And a small fact which I want to make you aware of, there will also be stocks which will get adversely impacted because of this change or revolution we are expecting due to electronic vehicles. Now, for example, if you want to understand basically stocks like Castrol. Now, Castrol is a leading global lubricant manufacturer. The thing is, there will be less use of lubricant in the electronic vehicles in the coming time period in the future. So even if you see the company has strong financial conditions, it has a strong good dividend yield, it is not performing very well in the recent years. So you need to be very cautious when investing into stocks of this kind if you are considering long-term investments. Please wait for a moment, just wait for the did you know fact at the end of the video, which we try to add as a cherry on the cake for people who like cherries on their cakes. Okay, so just wait for that, and the mandatory things I would like to sign off by saying, please subscribe to the channel, like the video if you liked the video, if you liked what you watched in the video, post a comment, post a feedback if you're willing to. If you think there is something worth mentioning, do mention in the comment section, and we'll see you guys in the next one. Did you know the world's most expensive car is the Bugatti La Voiture Noir, which costs at $18.68 million or 132 crore rupees. The name of the car translates to the black car.